What's going on, everyone? Sebastian here with Crypto News, bringing you the best crypto content on a daily basis. Today, we're going to be talking about smart contract technology and what major disruptions they're causing in the finance industry. And if this is your first time watching one of my videos, be sure to hit that subscribe button and turn on your notification bells. That way, as I release another crypto video like this, you'll get notified. And please, I encourage you to drop a comment below to share your thoughts on this video and let me know what you think about smart contracts and other capabilities they have that I did not cover in this video. Please, I always encourage you to share your thoughts and let me know what you think exactly about these crypto topics. Now remember, this video is strictly for educational purposes only. I'm not a financial advisor, so please do your own research anytime you're investing in cryptocurrency. The world of finance, as we know it, has undergone and is still going through fundamental transformations triggered by new technologies. The most evident is the blockchain, which has fundamentally altered the way financial transactions are handled today. During the early stages of these transformations, it was forecasted that this technology will have a significant impact on how the finance industry will do business in the future, enabling new business models, delivering new value propositions, and solving long-standing challenges with the much-needed transparency and security in transactions. However, the change is here and is still going on. The finance industry has seen tremendous transformations thanks to blockchain technologies. One of such technologies making the wave is the smart contract technology. In this video, we'll be talking about smart contract technology and how it has revolutionized the global financial space. So, what are smart contracts on blockchain? A smart contract is a self-executing contract in which the terms of the contract's counterparty's agreement are embedded in lines of code. It refers to computer protocols that digitally enable verification, control, and execution of an agreement. A smart contract is essentially a digital version of the standard paper contract that automatically verifies fulfillment and enforces the contract's terms. An American computer scientist and digital currency researcher Nick Szabo proposed the concept in 1994. The smart contract is executed via a blockchain network, and the contract's code is replicated across the network's many computers. This ensures more transparent and secure facilitation and execution of contractual terms. Note that the idea of smart contracts is primarily based on blockchain technology. A blockchain is a decentralized network consisting of a growing list of records known as blocks that are linked by cryptography. A blockchain network, unlike a traditional database, does not have a single central point. The data stored in the blockchain is shared by all the computers that make up the network. As a result, the network is less vulnerable to potential failures or attacks. Furthermore, smart contracts do not require a middleman to execute because the code of a smart contract is verified by all blockchain network participants. The elimination of the middleman from the contract significantly reduces the costs for counterparties. So let's take a deeper dive now into how exactly smart contracts work. So a smart contract operates by executing simple if, when, then statements written into codes on a blockchain. When predetermined conditions are met and verified, a network of computers executes the actions. These actions could be to transfer funds to appropriate parties, issue a ticket, register a vehicle, or simply send notifications. When the transaction is completed, the blockchain is updated. The implication is that the transaction cannot be changed and the results can only be seen by parties who have been granted permission. There can be as many stipulations as needed within the smart contract to satisfy participants that the task will be completed satisfactorily. The essential components of a smart contract are called objects. A smart contract has three main objects, which include the signatories, which are the parties involved in the smart contract who use digital signatures to approve the terms of their agreement. Then there's the subject of agreement or contract and the specific terms. So what revolutions has smart contract technology brought to the finance industry? Smart contract technology has introduced numerous changes in the finance industry. It enables fully decentralized operations and automation of businesses, allowing shared rules of engagement, conduct, and business process to be automated and enforced ecosystem-wide. Here are some of the ways smart contract is reshaping financial processes. First, there's error-free processing of insurance claims. Evaluating the legitimacy of an insurance claim is a time-consuming process. It takes a long time to check the terms of a manual contract and validate the claim. However, smart contracts powered by blockchain technology provide automated insurance claim processing to the banking industry. Smart contracts facilitate the filing of claims and their automatic validation via the blockchain network's decentralized ledgers. It lowers the risk of financial institutions having to compensate for fraudulent claims. Next, there's reduced transaction costs. Smart contract transactions are self-regulating. This allows for low-cost record keeping and reduces manual intervention, which results in a significant reduction in the cost of transactions. Next, there's real-time remittance. With the rise of digital payment methods came the greater need for a secure remittance system. Smart contracts simplify payment processing by allowing for real-time fund transfers while maintaining accuracy and transparency. They also expedite transaction settlements by allowing for self-verifications. Next, there's transparent auditing. Audits require meticulous record keeping. Traditional contracts require a significant amount of paperwork, and banks must invest resources to manage them. Advanced bookkeeping tools are supported by blockchain-powered smart contracts. These are based on the blockchain network's incorruptible and distributed codes. The solutions improve the transparency of stored records while eliminating the possibility of infiltration. Next, there's increased speed. The use of software codes to automate manual tasks aids in the reduction of transaction time. It aids the acceleration of banking operations by eliminating unnecessary manual processes. Next, there are streamlined KYC processes. In the financial industry, KYC is a critical function. Before offering a loan or engaging in other transactions with an individual, financial institutions confirm such a person's identity. A smart contract system facilitates the process for financial institutions. They can use blockchain records to verify individuals and entities, record scores, and identities. Tax returns and other related compliance requirements are also processed in real time, which is a huge help to accounting firms. Next, there's accurate contracts. Smart contract transactions are transparent and self-executable. They eliminate the need for human intervention, which reduces the possibility of error. As a result, they foster greater trust among the contract's participants. Next, there's gains for firms and consumers. Smart contracts benefit both financial institutions and customers. To ensure regulatory compliance, banks cut costs and streamline processes. Customers benefit from simpler and safer transaction methods as well. Everyone comes out a winner. Then there's smooth peer-to-peer transactions. Financial institutions are customer-centric, and when they want to adopt a technology that will help them, they want to make sure it will also benefit customers and clients. Smart contracts use distributed ledger technology to eliminate the need for third-party mediation. It lowers costs and simplifies transactions for those who do not have a bank account. The adoption of cryptocurrencies by retailers is facilitating peer-to-peer payments. Smart contracts enable such functions, including cross-border payments, without the involvement of any trusted third parties. They provide convenience and stability. Then there's asset management. Transfer of assets through smart contracts on the blockchain takes away the stress of the documentations that follow. If you're buying a house, for instance, with blockchain in place, your identity is stored and lenders can make credit decisions quickly. Then, between your bank, the house owner, and the lender, a smart contract would be created. The house will be paid for in accordance with the terms agreed upon in the smart contract. The transfer of ownership will be automatic because the transactions will be recorded on a blockchain and distributed to the participants. The best part is that there are no middlemen, and this means more savings. Smart contracts are changing the face of the finance industry with the slew of advantages they offer, ranging from error-free insurance claim processing, smooth peer-to-peer transactions, streamlined KYC processes, transparent auditing, and other initiatives. With their key features, which include resistance to tampering, self-executing, and self-verifying, they have proven to have more value than traditional contracts. Without a doubt, smart contracts can unlock more valuable insights for financial institutions to carry out their operations more smoothly and efficiently. Well, thank you so much for watching. Now you know exactly what smart contracts are and how they are revolutionizing the entire finance industry, and they're turning basically the old way of doing things on its head. So please share your thoughts in the comments below on what you think other areas are that smart contracts can infiltrate and actually benefit the users on both parties. And as always, if you found this video resourceful, please smash that like button. It really does help support this channel. Well, till next time, I'll see you all on tomorrow's video.